I mean, there's lots of things that we could talk about. You know, the housing market.
Least affordable year to buy a home in over a decade.
Let's try it.
Also the year we saw a record number of people paying well over 30% of their income on rent. And if you're looking for someone to blame, you're not gonna find them here. No, for that, we gotta go to New York.
New York!
New York! New York!
New York! It's a wonderful time!
Isn't it like, I don't know, fucking $5,000 a month for a fucking 600 square foot studio in New York or something like that? It's like insanely expensive.
New York? I've been there. Stinks of fish.
Good morning, ladies.
Because it's in these buildings that a lot of our story takes place. These nondescript glass boxes that we probably should have figured out don't make for great B-roll before a 45-minute subway ride. Anyway, these are the New York offices of real estate property managers, real estate tech companies, and private equity firms invested in real estate.
Oh, damn, I thought those were going to be like studio apartments. I mean, to be fair, you can get like a 40 square foot cubicle in New York for probably $700-800 a month, something like that. Just sleep under it.
Including everyone's favorite, Blackstone. These companies are a huge part of why we've seen home prices skyrocket all over the US these last 20 years. Today, the median home sits at some $400,000 and costs the average American, someone making about $80K, over 40% of their income in monthly.
Okay, once again, this video is about 7 months old. So, in your opinion, do you think that number went up or down since then? I'm just wondering what you guys think.
Housing costs. This is about as bad as it's ever been, and just to give you an idea, 80 years ago, the average house only cost about 18 grand, roughly 180K in today's money, at a time when the average...
Okay, so it was adjusted for inflation, which is good, because a lot of people would legitimately think that $18,000 today is, you know, the same. Not everybody, but yeah, some people aren't aware of inflation, apparently.
Average income was only a third of that, around 6K. Basically, we've seen homeownership get about twice as expensive for the average person since your grandparents bought their house for a nickel and 7 strawberries. And the story isn't much better in the rental world, where more than half of all renters are paying more than the recommended 30% on housing, and over a quarter are paying more than 50%. It's gotten so bad that there's basically nowhere in the country where someone working a full-time minimum wage job can afford a simple 1-bedroom, much less an apartment for a family.
Well, so if you're trying to get an apartment for a family, you wouldn't be doing it on your own. You would have, hopefully, at least one person helping you with that. If you're the breadwinner, and you're the sole person making money for that household, and that's what you're doing, well, that's a stupid fucking idea, if you ask me.
Hold up! Time out!
How did this happen? The conventional narrative, both on TV and in Twitter Econ Bro replies, pins the blame on simple supply and demand.
Supply,
Demand.
supply and demand dynamic.
You'll often hear this idea that what's driving up the price of housing is basically not enough homes. Too many people chasing too few houses, meaning...
You know, I'm not a goddamn real estate agent or an expert in the subject, but the last time I checked, there is really no shortage of houses right now. What there is a shortage of is affordable houses.
Bidding wars and competitive buyers markets. This is an Econ 101 explanation that's surprisingly persistent for just how wrong it is. The truth is that the price of homes has almost nothing to do with the actual supply. In most cases, house prices go up year after year pretty much regardless of how many homes there actually are. Sometimes housing construction stagnates.
Well, that's due to inflation though, isn't it? The price of almost everything goes up every single year, regardless of supply and demand. Now, if things are in higher demand with a smaller supply, they go up more. But save for like gas kind of goes up and then it comes back down goes up, comes back down. Back when gas was like super expensive in other places a year or two ago, I don't think I've ever seen it more than $4.50 a gallon here. Right now, I think it's sitting right around the $2.80, $3 mark or something like that. But yeah, the price of everything goes up typically over time. Just look at the stock market.
And prices go up. Sometimes construction outpaces demand, and prices still go up. What actually matters for the price of a house is the demand and supply of finance to both housing consumers and housing producers. And that's mostly got to do with changes in government policies since the 80s, global finance markets, and the massive generational wealth gap between the old and the new generations. But let's look at the rental market for a second. Before we get to the finance side of things, let me just show you how wrong the very basic supply and demand story is in the rental world.
Well, I mean, you can carry that over. No matter the reason that the cost of a house is going up, the cost of houses are consistently going up, right? That's like what he said. Adjusted for inflation, they've doubled in the last 60, 70 years. That's what he said, pretty much. There's a lot of things that have went up like 1,000% in 50, 60 years. So a house adjusted for inflation, thank God, isn't like 5 or 10 times as expensive as it was 50, 60 years ago. But if you carry that logic over to the rental market, well, who are you renting from? You're renting from the owner of the property. If they have to pay more for a house, they're probably going to charge more for the rent. You know, if their mortgage goes up, because most people don't own houses, we'll probably end up getting to that in a little bit. Well, they're going to have to charge you more to live there. I feel like that makes sense, right? Is that a logical conclusion, logical assumption to make? Or am I delusional? I don't know. We'll see what this guy has to say, though.
Specifically, thanks to the new popularity of rental algorithms. For that, let's go back to 2022. We were deep in the post-2020 inflationary
I love the
cycle.
continuity of this
Rents
video.
in one-bedroom apartments were up 17% from 2 years prior. And when asked to comment on why by the New York Times, this guy, Jay Parsons, fell back on the simple supply and demand explanation. Quote, "The reality is that rents can only rise as incomes rise. If people can't afford it, you can't lease it." The problem is, that was a lie. Millennials and Gen Z's wages aren't rising, and are actually lower in many places than they were for older generations. We're all paying way too much for rent. The reason Mr. Parsons is peddling this false narrative in the New York Times, though, is that his, now former, employer, RealPage, is to blame for a lot of these rents going up. For years now, tech companies like RealPage, Yardi, and their competitors have been selling a special piece of software to
Wait, let me just make sure that hold on.
or in many places than they were for older generations. We're all paying way rise as incomes rise. If people can't afford it, you can't lease it. The problem is, that was a lie. Yardi.
Okay, just that one statement right there. If you can't afford it, you can't lease it. I want somebody to tell me what is inherently false about that. Now, the fact of the matter is, rent is way more expensive. Houses are way more expensive now, almost than they've ever been, right? But I still don't see the fallacy with that statement. If you can't afford something, then you can't buy something. Am I wrong? I'm not trying to be argumentative. It's a legitimate question. That goes for anything. That goes for a fucking case of beer. That goes for a loaf of bread, a dozen or 18 eggs. You know what I'm saying? If you can't afford it, you can't afford it. And by the way, if you can't afford a dozen eggs, I understand that they are ridiculously expensive now. But if you can't afford a dozen eggs, chances are you're not going to be able to pay a fucking mortgage on your house nowadays. I digress.
And their competitors have been selling a special piece of software to private landlords that allows them to aggregate all sorts of information about the apartments they own. Using that data, collected from thousands of landlords and significant chunks of any given area's rental market, RealPage's algorithm recommends things like what landlords should charge and specific occupancy rates.
Now see, if the value of something is being manipulated to where you can't afford it, that's not a fair correlation with the statement, if you can't afford it, you can't lease it. If it's being manipulated to the point where you can't afford it, I don't think that connection should be made. You should have kind of led with that, but yeah.
Most of the time, pushing those two things in opposite directions. Take the occupancy rate, for example. Landlords used to shoot for around 97 to 98% occupancy. Obviously, right? You have apartments, just lease them out.
No shit.
Landlording's not a real job, this shit's easy. Anyway,
That's not true either, but
maximizing the number of people occupying the places you own seems obvious, and even lines up with what landlords lie and say their job is, providing people with housing. In recent years, though,
that's not their primary responsibility, fam.
landlords have found that this sort of quote-unquote obvious logic doesn't hold up. According to ProPublica, RealPage's software has recommended property managers reduce their occupancy down to about 94%. Units stay empty, but thanks to the algorithm's calculation and its ability to push out the same recommendation to a ton of property managers at once, landlords actually see a net revenue increase of about 3 to 4% when they empty units and raise rents on those they keep occupied.
Really? That's wild. So if I charge more rent, okay, hold on. And I get that this guy isn't the one who came up with this, and he's just talking about it, but you mean to tell me that if I raise my rent, if I'm charging, $1,000 a month for my 8 2-bedrooms, I am only renting 6 of them, but now I'm charging $1,200 or $1,300 on the 6 units that I am renting, that I'm going to have a net profit increase? Here's the thing that I don't get. If you have like a multi-family home and all of the units are available for rent, who in their right mind is not going to want all of those units occupied? That goes for real estate as well. If I have a house, a duplex, or anything that I'm trying to rent out, why would you want any units unoccupied? What sense does that? Am I missing something? That's how you lose profit. You are making way more money with all of your units occupied and charging a fair price. Anybody who believes this shit is straight up retarded.
Same goes for turnover. Using RealPage's software, landlords found that if they increase turnover by about 15%, meaning kicking out tons of people as soon as their leases end or being more liberal with evictions, they can raise rents quicker. And this has real consequences.
Really? Yeah. As opposed to building a rapport with somebody that's been there for 5 to 10 years, you are rolling the dice on a brand new tenant essentially every 12 months. And yeah, of course, the next tenant isn't really going to realize that you're raising the rent, but you're charging more. And it's always a gamble. You find a good tenant and you keep them there. Because at that point, every single time you evict somebody and you have somebody else move in, that is a 100% gamble on the state that your property is going to be in those 12 months. I know from personal experience because that is essentially the exact same problem that I am having in this unit right now. Not the one that I'm in, but the one that's underneath me. Guys went through 2 tenants in the last 3 years, and he's not intentionally doing that, and he's not even raising the rent by all that much. It's a 3-bedroom. It started out at $750, now it's $850. That's incredibly fair for the market nowadays. And he hasn't found one good tenant since my neighbor that I initially moved in and lived above. So you find a good tenant, you want to keep them there because at that point you have vacancy times, you have security deposits, you have damage to your property. So yeah, you get to keep their security deposit. What if they do $5,000 worth of damage to that property? And then you're taking a month or 2 to fix it up and you have to come out of pocket for that.
Consequences that the CEO of RealPage knows because last year he told a trade publication, quote, "The net effect of driving revenue and pushing people out was $10 million in income. I think that shows keeping the heads in the beds above all else is not always the best strategy."
Once again, this is the absolute dumbest fucking thing that I have ever heard in my entire life. If you have somebody that's been there for a year and they have consistently paid on time, never miss a payment, no problems, no damage to the property, that is a consistent revenue. When you get greedy, you're literally gambling with your property. You can have a dope fiend move in that's going to fall asleep with a crack pipe in their lap and burn your fucking house down. What do you do in that case? And don't tell me insurance, because you are still coming out a lot. And at that point, if it's a multifamily, you're putting other lives at risk. That's an absolute worst case scenario, but it is a possibility. I know they're not looking at that and they're only looking at the net profit, but driving rent up just because you want to, not the best strategy.
This isn't normal rhetoric.
No.
It's cruel, calculated, and basically automated violence. Especially given that hundreds of thousands of people in the US are homeless, and a majority can't afford the place they live. RealPage's software, which unfortunately gets better at this extortion racket the more signups it gets, rigs the market even more in favor of landlords than it already was. By letting landlords coordinate their price hikes without actually needing to collude, just following an algorithm's recommendations, RealPage's approach kicks more people out of their homes, leaves more apartments vacant, and allows property managers sitting on hundreds of units to get a bigger chunk of people's dwindling incomes. This single example shows that the price of rent has nothing to do with the number of livable homes and everything to do.
What happens when you drive the prices up so much to the point that people can't even afford to move in them anymore? Or they can't afford to pay rent every month? Are you still making a profit at that point? If you're charging somebody $2,000 a month to live in a 3-bedroom and they only pay you rent for the first 2 months and then partial for the next 10, and then you evict them, what happens if the next person comes in and that happens? And now you're charging $2,200 because that's what they're doing, right? I just don't understand how this is a smart strategy by any means. And maybe because I try to be like a logical person, and money isn't always the most important thing. But even with my reasoning, it is a consistent income. If you have to evict somebody, you have to evict them. If you look for a reason to, just so you can kick them out to get somebody else in to charge them more rent, why don't you just charge the guy that's living there more rent? And I don't even think that's fair. I'm just saying.
With how comfortable property managers are using various price gouging techniques, in a for-profit business, they're going to be very comfortable. But underneath this thin layer of dystopian tech, there's a deeper core of private finance that's really driving all this. A big part of the landlording that exists today comes from small-time landlords. Mom and pop style setups where people buy an extra property with the express purpose of leasing it out.
Yeah.
But over time, we've seen this small-scale approach complemented by huge interest from private equity firms. Apollo Global Management, the Carlyle Group, and maybe most famously, Blackstone, to name just 3 big ones in a sea of private equity firms, have all recently upped their investments in real estate.
Okay.
In the first quarter of 2022, nearly a third of all single-family homes sold in the US were bought by private investors.
And probably a huge chunk of those were from those 3 organizations or firms that he just listed.
That's already not great. But some areas are seeing even more dramatic numbers. Not only that, real estate markets that investors used to not touch are seeing the same trend. Nearly 25% of mobile home purchases in 2020 and 2021 were made by private equity groups, meaning some 21 million people living on very tight budgets saw their housing get bought up en masse, and for some of them, their rents go up as much as 60%. By making cash offers and bypassing a lot of steps someone who would actually live in a house would take, like an appraisal, private equity has...
Or somebody who is going to get that same financial treatment for somebody who's trying to rent it out. It's not just somebody who's trying to buy it to live there. It's the exact same process for a mom and pop landlord to finance or mortgage that house.
Completely taken over real estate, swooping in and raising housing costs for everyone along the way, renters and homeowners alike.
Yep.
But why, right? Sure, profit is an
Yeah. A monopoly, I'm assuming?
easy answer, but it's not really an explanation for why it's so profitable for so much capital to go into real estate.
Well, yeah, it is. If you have the corner of the market on the majority of the houses in the United States, you can charge whatever you want for them, right? You don't have to be fair with your pricing anymore. You just don't. That's not how that works. I mean, at the end of the day, no matter what else this guy's about to say, and I have no idea what he's about to say watching this first time, it all boils down to profit. Yeah, 100%. Yeah, for sure.
So much capital, actually, that in the US, out of roughly $178 trillion of national assets, almost half, about 84 trillion, is in real estate.
Yeah, no shit.
In the words of Robert Shiller, the Nobel Prize-winning economist, quote, "Far more important to the world's economies than the stock markets are wage and salary incomes and other non-financial sources of livelihood, such as the economic value of our houses and apartments. This is where the bulk of our wealth is found."
Yeah.
That's a relatively new thing, and there's three parts to how we got here: government policy, generational wealth gaps, and capital's demand.
Well, I mean, I don't mean to criticize, because it is a great video so far, and it is relatively informative. But what did I say? It all boils down to profit. It doesn't matter why. He made it sound like there was going to be some other reason. No, it's profit. Absolutely profit. What other reason could it be?
Demand for liquidity. Since about the 80s, governments all over the world, including the US, have changed the way they operate pretty drastically. Where once the New Deal and the Keynesian era of the 20th century meant governments trying to run an economy with decent jobs that paid pretty well paired with decent government services, Reagan's turn to neoliberalism meant pretty much gutting all that and replacing it with personal debt. It's around this time that credit scores appeared and mortgage loans exploded.
Damn, I did not know that. Hold on. Oh, look at that shit. Really? Come on, man. Wow. You learn something new every day. And this is something that I wish wasn't true.
This new governmental approach has a name: house price Keynesianism. Neoliberalism means lower real wages, non-existent public services, and weaker working protections. It sucks, but you can't jump straight into it.
Piss break!
To compensate workers for the fact that wealth was
No, you
being
gotta
priced
ease
into the
into
top
it.
1% much faster than before, the 80s marked a radical shift towards consumer debt, specifically mortgages. Basically, while everything was being slashed and home budgets took a hit, credit card debt and easy access to ultimately more expensive mortgages meant you could still live a version of the American dream, including the all-essential homeownership part. But this has a few consequences. For one, it means people are now on the hook for a lot more. Debt is a form of public control and accountability. There's this huge push for financial literacy programs to get people to take on more debt, and most importantly, get it through their heads that they have to pay these debts back and it's a moral failing if they don't. Ensuring this compliance when wages are declining is critical. Why? Because governments begin to facilitate using this housing debt as a financial instrument and integrate it into the broader economy. Housing debt becomes an asset that investors can start trading through a process called securitization. If you haven't heard about this before, basically you start with a mortgage in the primary market. The bank gives you a loan, you pay the bank back. Seems simple enough. Starting in the 80s though, the US government wanted to create—
Bro, I took the absolute worst timing to take a piss, so we're gonna run it back a minute. Just a minute.
essential homeownership part. But this has a few consequences. For one, it means people are now on the hook for a lot hit, credit card debt, and much faster than before. The 80s marked a radical shift towards consumer debt, specifically mortgages. Basically, while everything was being slashed and home budgets took a hit, credit card debt and easy access to ultimately more expensive mortgages meant you could still live the American dream, including the all-essential homeownership part.
All right. That's what I wanted to get into. Homeownership. You know, this is going to be kind of a video within a video, apparently. But that is one of the most misleading words in the English language. You don't own that house. A lot of people don't understand that. They're so convoluted and delusional that they think when they sign that mortgage, you know, when they're obligated to pay a bank, every single month for 30 to 50 years. Some people pay 15, but you can't afford a 15-year mortgage nowadays. When they sign that mortgage, that the house is theirs. No, it's not. I rent, okay? I've been at the same place for a little over 6 years now, about 6.5 actually. I am incredibly blessed to be paying what I pay for rent. I have a 1-bedroom, not the biggest, but it's perfect for me and my cats. I pay $575 a month, and that is today. I pay $25 a month for the water. That's it. I pay $600 a month total to my landlord every month. What's the biggest difference between paying rent and paying a mortgage? Like the biggest difference. Well, yeah, you have, I give it to a guy, you're paying it to a bank. That could be one of them, yeah. Well, the other one, if you're paying that mortgage, I'm not paying interest on my rent, okay? I'm not paying like 8 or 9% interest on my rent every month. That's a big one. A similarity would be, this place isn't mine. That house isn't yours either. You can do whatever you want to it as long as you keep paying that money. You know what I'm saying? You stop paying them, you're going to get kicked out just like me. It might take a little bit longer. It's a little bit of a different process, but you're getting the fuck out. You know what I'm saying? But I would say the biggest difference would be, let's say one day your roof gets all types of fucked up. Hailstorm, tears off your siding, puts holes in your roof, breaks a couple of your windows. Do you want to go ask the bank to fix that for you? If you do, take me with you, please, because I want to see what they say. I have a pretty good idea, but I just want you to know that I know. The long and short answer is fuck no. They're not going to help you out at all. Then you're going to have to take out another loan to redo your roof, redo your siding, get those windows taken care of if you don't have it in your account. Which, I mean, the vast majority of people can't even afford their mortgage nowadays. So chances are they don't have the funds laying around for a $20,000 roof repair, or a reshingle, or a residing, or to get their windows replaced. The best case scenario would be just having to replace the windows. But yeah, if something were to happen to this place, I just got my roof redone, I want to say 4 or 5 months ago. I should say my landlord got the roof done probably 4 or 5 months ago. Maybe a little bit longer, but do you know how much he charged me for that? Nothing. Not a goddamn thing. Got the soffit fascia redone. The windows downstairs got redone. If I wanted to change out the windows up here, which I'm not a huge fucking stickler for that, they do what they do. The windows be windowing. There's like wood, and then there's glass in the middle. You know, my windows are a little bit older, but they do what they're supposed to do, so I don't really care about that. You don't have to pay for any of that. So I'd say that's probably the biggest thing. The other probably massive fucking difference is the amount that I pay versus the amount that the homeowner has to pay, right? What's the average mortgage in the United States? I know it's determined by like area and everything like that, but even to pay rent here, you look for a 1-bedroom, it's like $1,000. 2-bedroom, $1,200 to $1,500. 3-bedroom, probably $1,750 to $2,000 in some places. What's a mortgage looking like on a fucking mean $400,000 house? Depends on how much you put down, right? Let's say you put down fucking 20%. Well, your mortgage is probably going to be anywhere from $1,800 to $2,500 a month. And you're still coming out of pocket for any repairs. Your fucking sewage line goes out. You're paying for trash removal. You have to pay that yourself now. You're paying the entirety of the water bill. Gas bill, electric, you know, that's any renters nowadays, that shit's usually not included. Oh, you get to have pets there a lot of the time, because a lot of renters now, because of these big firms, they don't want people to have animals, because animals are the biggest proponent of fucking up property. I can attest to that 100%. It's not bad, but there's claw marks everywhere. So yeah, you have that. It's not true freedom though. Show me the deed to your house and show me where it has your name on it. And then maybe I'll lay off a little bit. At the end of the day, there's not a huge difference between me paying rent to my landlord and you paying a mortgage to a bank. There's way more similarities than there are differences.
But this has a few consequences. For one, it means people are now on the hook for a lot more. Debt is a form of public control and accountability.
And for a lot longer.
There's this huge push for financial literacy programs to get people to take on more debt. And most importantly, get it through their heads that they have to pay.
Isn't that super ironic? That these programs are incentivizing you to take on more debt and how to manage more debt? That's the opposite of financial literacy. If you can't afford it, don't buy it. I'm not saying don't get credit cards. Just don't run those motherfuckers up. I'm not saying don't get a car. Don't not get a house. But if you can't afford it, then yes, absolutely don't. 100% don't. Just don't do it.
Pay these debts back, and it's a moral failing if they don't. Ensuring this
Well, it is. It 100% is.
compliance when wages are declining is critical. Why? Because governments begin to facilitate using this housing debt as a financial instrument and integrate it into the broader economy. Housing debt becomes an asset that investors can start trading through a process called securitization. If you haven't heard about this before, basically you start with a mortgage in the primary market. The bank gives you a loan, you pay the bank back. Seems simple enough. Starting in the 80s though, the US government wanted to create a secondary market for all this debt.
For a free guide that can put you on the path to homeownership, call the Fannie Mae Foundation.
Wait,
We're
what?
Showing America a new way.
What?
In 1981, Fannie Mae, the Federal National Mortgage Association, starts issuing mortgage-backed securities. 2 years later, Congress lets Freddie Mac, the Federal Home Loan Mortgage Corporation, issue the first collateralized mortgage obligation. And in 1984, Congress passes the Secondary Mortgage Market Enhancement Act, which, quote, removed statutory restrictions on investments in private MBSs by federal chartered depository institutions. And then you have the Tax Reform Act of 1986. You know what, it doesn't need to be this complicated. The point is, the government created a market for investors to—
I was gonna say, this motherfucker is about to lose me, just a little bit. I am not a financial genius, but I know most debt for people that don't have money is bad. If you're a billionaire, debt is about the best thing that could ever happen to you. But if you're living off, say, $80,000 to $100,000 a year as a single person in the year 2025, debt is your enemy. And buying a house, guess what? That's debt. Buying a car, that's debt.
to bet on mortgage debt. It allowed banks to take all the mortgages they gave out, pool them together, slap a label on them so different mortgage pools could be compared, and essentially sold them to investors all over the world. It takes the illiquid physical home that someone actually lives in and turns it into a liquid, easily tradable, valuable asset that investors can pour money into. This
So once again, profit.
was useful because back then, capitalists had no idea what they were going to do with all the money they were making from not paying their workers fairly. You can't leave that money just sitting there. It'll lose some of its value. And without money circulating in the economy, the risk of an economic crisis keeps growing.
Isn't it ironic that this is now one of the biggest contributing factors to economic failure in this country?
Capitalism is constantly running towards this very precarious situation where money stops moving, and suddenly people are left holding the bag for obligations they can no longer actually fulfill. In David Harvey's words, then you need a fix. Somewhere to fix and put money in and keep it moving.
So say that you're on year 28 of your mortgage and something devastating happens and you are no longer able to afford your mortgage. You, your wife, your kids, whatever. Maybe it's just you. I don't know. Any situation, right? And I know a lot of you are just initially going to be like, well, you just refinance. Okay, chill. What if that's not even an option? What if there is like no financial influx for whatever reason? Maybe it's your fault, maybe it's not. What if you can't afford to pay that? Well, you're probably going to get a certain amount of time to fucking pay it, or the bank is going to foreclose on your house. That's basically an eviction, right? In a sense. Like you could sell it back to them, I think. You would get no equity. So yeah, you're on your 29 of your 30-year mortgage. And for whatever reason, you can no longer afford to pay. On the last 3 months of your payment. Well, you're probably going to get foreclosed on. The bank takes their house back. And then what do? They put somebody else in that motherfucker for another 30 years. That's what they do.
And what could be better than real estate? You have too much money, you use it to create an asset of equal worth that you'll be able to sell at some point, and you've saved your cash from sitting in the bank. The problem with real estate is that it takes time to design, build, and sell homes like this for a profit. Luckily for capitalists though, now that there's this huge secondary market in mortgage-backed securities thanks to the government,
Yeah, I mean, It saves a lot of time when you're already buying up houses that exist already, isn't it?
Everything moves a lot faster. There's more debt, and therefore a place to put your money, if you have a lot of it, that'll keep it circulating and growing. This way, real estate becomes not just a good investment for people looking to make more money, but a source of liquidity for capitalist markets that are terrified of drying up with no more places to invest the
It's usually people that already have more money than they know what to do with, but yeah.
money they've stolen. And for the rest of us, this means more expensive homes. Now that housing costs are no longer related to any sort of supply, or how useful they are for the people who actually live in them, but rather how valuable they can be made as stores of value and sources of liquidity, their prices reflect the power of capitalists over that process and their ability to enforce debt repayment from homeowners and landlords. Real estate becomes just another overflow tank that's meant to protect capitalists from rushing into the next crisis.
And you know what? The funny thing is that as expensive as houses have gotten, there are still people in 2025 that think the right move is buying a house. Inherently, if that house was yours and there was some sort of reasonable system to make that house yours for an affordable price in a reasonable amount of time, I would have nothing against homeownership. The fact of the matter is, in this day and age, there isn't. I've been saying this forever. If you know me, this is something I've been saying for a very long time. The housing market is a fucking scam. 100%. It all started in the 30s and 40s, maybe the 50s, with that American dream shit, just to make people feel like if you don't own a house, if you don't own a house, well, you're a failure. You're not living up to the American standard. Oh, you rent? You know what I mean? That's what I hear from a lot of people. The fact of the matter is, nobody owns their house nowadays. When I say nobody, I'm not saying 0% of the population. I'm not saying that. What I am saying is very few people in this day and age, regardless of age or location, are true homeowners. They will be paying a mortgage for the next fucking 15 to 20 to 30 years. That's how they get you.
This also means that governments are now desperate to keep this cycle going. Mortgages are inflating house prices because families can now borrow way more than they can afford. Mortgage-backed securities inflate home prices because
and what happens when they can't pay it back? Homeless.
Liquidity brings more money into the world of real estate. And because homeownership is now people's main avenue for building wealth in a world of declining real wages, keeping the value of these assets going up becomes a huge obsession for governments desperately trying to avoid a return to a time when people were paid more fairly. So cities weaken protections for renters to attract more corporate landlords. Neighborhoods gentrify to accommodate more sites.
I mean, evicting the tenant doesn't have anything to do with the landlord. Did I miss something there?
Wealth in a world of declining real wages, keeping the value of these assets going up becomes a huge obsession for governments desperately trying to avoid a return to a time when people were paid more fairly. So cities weaken protections for renters to attract more corporate landlords. Neighborhoods gentrify to accommodate more sites for capital.
I mean, that should be more for private landlords, not for the people renting from the private landlords. I'm just saying.
To find its fix. And public housing developments slow down everywhere and even start to be demolished to make room for privately funded construction. Some twisted reading of this might make it seem like a win-win. More money going into real estate means more or better homes, right?
No! Who the fuck? No.
Not really. For this system to continue year after year...
Is that for like the 4 people that would see this and think that? I wouldn't even acknowledge that.
You need 2 things to happen. Housing prices need to constantly keep rising, meaning buying a house or staying in the rental market is almost always guaranteed to be more unaffordable from one year to the next. And people need to keep taking on more debt and being forced or guilted into paying it back. 2 things that feed off each other and temporarily stave off capitalist crises, but make them way more destructive when they do hit.
Yeah.
I think this is the most significant financial crisis in the post-war period.
The phones say a lot of their customers are freaked out, waiting to see how low the Dow will go. They're
So while governments find new ways to create liquid assets and investors keep finding new ways to take advantage of that liquidity to grow their capital, the rest of us are left holding the bag, taking on debt that we can't afford to live with or live without, staying in homes that get more expensive than we can keep up with.
I mean, realistically, is there a good solution to this? Not really. No. Realistically, there isn't. The best solution would be to not take on a financial burden if you aren't going to be able to perpetuate that in the long run. An even better solution for the consumer, for the people trying to buy houses, fucking don't. Because realistically, you will have dumped so much money into that house in 20, 30 years that if you try to sell it, yeah, absolutely, you're probably going to get a little bit more, but the house isn't paid off yet, so you have to pay the bank off first, and you've paid so much interest that you're lucky to break even or make $20,000, $30,000 profit. And then what? You move into a different house? I have people tell me all the time, Sauce, you're throwing your money away by just paying rent every month. You don't own it. Well, what do you call interest? What do you call fucking 8 to 10% interest on a $400,000 house? You don't call that throwing your fucking money away? Motherfuckers pay more in interest a year than I do for rent. So that's out. Well, he can kick you out whenever he wants. A lot of landlords can. You know what I'm saying? That's typical concern that a lot of renters do have with their landlord. But if you run the risk of being kicked out and your landlord is a legitimately good person, there are people out there who actually hate landlords just because they're landlords. Just like there's people who hate police just because there's police. I don't believe in that mindset. I believe that at their core, they are still people. There are shitty landlords and there are shitty cops. And then there are good landlords and there are good cops. And they're still out there because my landlord is a good landlord. You know what I'm saying? So I'm not running the risk of being kicked out one day just because he wants to charge another tenant more money. I've been here 6.5 years, and the only time my rent was ever raised was him charging me 1/4 of the water bill. That's it. $25 a month in 6.5 years. And that wasn't even for the property. It was for the water bill that he typically takes responsibility for because the water bill's not in my name. So he's been paying that for the last 6.5 years, and I'm more than happy to contribute, seeing as how I use the fucking water here. If I want to leave tomorrow, all I have to do is give due to notice. If somebody that owns a home wants to leave, well, first they have to probably find somebody to buy their house, because chances are, with all that money they've been dumping into a mortgage, they're not going to have money right now. So they got to fucking wait and wait and wait. The whole thing is the biggest scam on planet Earth. I don't know who needs to hear that, but it's the truth. And nobody's going to change my mind on that. Even if you're buying it as an investment property, chances are in the long run, you are not going to make that much money off of it. A lot of people were making money off of Airbnbs back in the day. Well, the prices of those have gone down as well. And the profit margin on those is so low. Chances are you have somebody coming to your Airbnb for a week. Well, they're coming there on vacation. And a lot of the time, not all the time, they're there to party. So if you don't end up cleaning the house yourself, and that's if there's no damages, well, that's time. That's time that you're going to have to wait to rent it out again. You know, it's even that isn't turning a profit nowadays.
Parasitic landlords using every trick in the book to either kick us out or gouge us for more than last year.
And that sucks. Not everybody, but it's a lot. Yeah.
Just having more money would be great. Getting a raise, unionizing your workplace, clawing back more of those profits from capitalist bosses would be a huge relief with all this horrible stuff happening behind the scenes. But here's the truth. It'll never be enough. So long as housing remains privatized and this entire system of...
Well, here's what would happen, right? Let's say everybody got like a 15% increase in wages. What do you think would happen to the housing market at that point? We can barely afford it now, and they're juicing the fuck out of us. Everybody in the United States right now got a 15% wage increase. They raised the minimum wage to $15 an hour, which, I mean, still isn't jack shit. I feel sorry for the people who are actually making minimum wage now, but they raise the minimum wage and they raise your wage. Well, the cost of the houses would fucking skyrocket about that, if not more as well.
Mortgage-backed liquidity keeps pushing the cost of living up. They're going to keep draining you of any gains you make.
Exactly.
Like that RealPage guy said, if they think you can afford to pay more, they'll charge you more. We need more than higher wages. We need tenants unions, social housing programs, rent strikes, but most of all, a definite end to capitalism. This system demands that its wealth keeps growing in value, but capitalists can't bear to pay the cost of it themselves. It will never...
I mean, this is kind of where he lost me. Capitalism in the state that it's in right now might need to get revamped a little bit, but I hope he goes into some sort of alternatives, but...
be enough to just underpay you. They will overcharge and overburden you with debt to keep their stupid little game running. So until decent, livable housing is a public right, not a commodity, not collateral, not an asset, a right that we are all entitled to owning for ourselves, you will never be able to afford a home.
I don't know, man. He literally lost me right at the end of the video. Because, like, it kind of is a right. Right? If you have, like, 20, 30 grand in the bank right now, and you want to buy a house, you find a house, that's your right. I feel like the whole capitalist system is designed to fuck us over. If there's any other alternatives to that, because, you know, this is borderline starting to sound like some commie shit. You know what I'm saying? Everybody has the right to, well, to what? And I'm not saying that's what he's getting at. I'll just let him finish.
It's just too useful for them to keep you scrambling.
But is that it?
As I mentioned at the beginning of the video, you can now find Second Thought on Means TV, the home...
Oh, yeah, that actually is it. End to capitalism? No. Complete rework of the capitalist system? Absolutely. What other alternatives are there? I'm legitimately asking, what do you think would be a better alternative? And that is not me saying that the capitalist structure that we have in this country right now is good. That's not me being facetious or anything. That's not a hypothetical question like, oh, can you name something? I legitimately want to know your thoughts on it. This typically isn't my wheelhouse. I don't have the answers. You know what I'm saying? I'm a fucking guy streaming to one person right now. So I don't have the answers. But I do know that there are problems. In terms of what we can do about it, very little. Very little. Everybody all together, banding together, there's very little we can do. The people that can make the changes are at the top. Even the people you vote for, in my honest opinion, most of them, red or blue, left or right, are honestly so fucking corrupt that no matter who gets in office, you're just going to be fucked one way or the other. You know what I mean? Chances are, though, the Venn diagram, there's going to be a circle in the middle, you know, and depending on who's in there, that's the size of the middle circle is going to vary a little bit. There's no true solution to a problem when our entire, like, it's good. I'm not going to say ignorance is bliss, because it's not. The most we can do in this situation is know that we're getting fucked most of the time on most things and find the best route to try and avoid it. What's the extreme? Fucking leave the country? I mean, sure. I don't know much about the rest of the world. You know, I've never traveled 200 miles further than where I am right now, aside from where I was born. So I can't give you an alternative. You want to move to a different country, that's fine. Go ahead and do it. If you're trying to stay here, I guess the best thing you can do is, you know, the best advice that I can give you, because it's not going to be a solution. If you can't, and he said at the beginning of the video, kind of, if you can't afford it, don't buy it. There's people I know right now that are looking at, you know, $300,000, $350,000 houses with a 30-year mortgage, 20% down, if that. That's cool. That's all your money, fam. You going broke just to say you got something that you don't. That's how I feel about homeownership in this day and age. If you can afford it, this message is not for you. If you have a mortgage and you are living even somewhat comfortably, you are not the majority. And I'm proud of you for that. But a lot of people, and this is true, a lot of people nowadays will get a mortgage for a house just for the ability to call themselves a homeowner. And that shit ain't it. And I mean, I don't really have anything else to say on this subject. That is what it is. I really don't feel like anything's going to change. All the things that he was mentioning, the things that he was mentioning, yeah.
Charge you more. We need more than higher wages. We need tenants unions. So
Well, if most of the property is now being owned by private conglomerates, do you think that's going to happen?
social housing programs.
If most of the real estate in this country is being bought up by private conglomerates, do you think that's going to happen?
Rent strikes. But
you can do that. You can absolutely do that. And you're going to get kicked the fuck out. You know what I'm saying? These are excellent solutions on paper. Tenants unions, they're not feasible without some sort of agreement from the people that you are a tenant to. I don't think tenants alone can come up with tenants unions. You can think that you do, but I just don't think that's a thing. You know what I'm saying? It's just not. All of these would be great starting points, but this whole video is counterintuitive to everything that he's saying right now, because in the state that everything is in, that's just not going to happen. It was a really good video, honestly. Super well done, super informative. He is offering some alternatives and some positivity. I'm positive when it's warranted. I'm not a pessimist, I'm a realist. Those two are getting harder and harder to tell apart nowadays because this country's kind of fucked, you know what I'm saying? Not saying I'm ashamed to live here, not blaming it on anybody. I'm not. It's not that I'm not trying to get political, I'm not. Like, that's just not how I see it. I feel like it's more than one person who, you know, I guess I'm the minority in a conversation like that, but yeah. Thanks a lot for watching. Like I said, like, subscribe, comment. You want to see me do something? I'm not going to know if you don't tell me. You know what I'm saying? You got to hit a button. That's it. Takes a second. Do it one time for the one time. I appreciate it.